Hi traders, Nathan Bray here from ACY Securities. Well, it's official folks, technically that is. The trend on the US dollar has broken to the downside. The US dollar is weakening. It had been consolidating on this US dollar index and found support around this 100.80 level. That, folks, has blasted through the floor. We are seeing a weak US dollar at the moment. Now, fundamentally, it could be that we're reaching the top of their tightening cycle. Interest rates may start to have one or two raises before it starts to drift sideways and potentially reverse, taking away some of the attractiveness of buying US dollars. We're seeing that in the 10-year yield too. So that 10-year yield was sitting up around 4%. We're now seeing that drift down to the 3.7s. A lot of weakness from the data as well. So we had their biggest data event, the NFP, the non-farm payroll data, really miss its target. Okay, so jobs aren't being created as rapidly. We even had previous months reduce what they were saying they created as well. So there's a lot of weakness there. We're also seeing CPI drop. So their CPI year on year has dropped all the way down to 3%. So the need to raise rates may be dissipating at this stage if they can keep that CPI under control. The PPI that feeds the CPI, it's also missed its target. We had retail sales folks missing their targets as well. So we are in a situation where the economy in the US is starting to contract and we're seeing the need for US dollars really start to plummet, okay? So the trend is down. So the only issue I've got with the talk about how they've got their inflation under control is the fact they had kind of a double whammy. They were raising rates, okay, to try and contract the spending, okay, and reduce prices. But at the same time, with the strong US dollar and stable US dollar, we had commodity prices falling because they're largely priced in US dollars. So that helped their pricing, didn't it? Whereas now with a weaker US dollar, we could be in a position where their commodity prices are going to cost them more, okay, feeding into inflation. And all their imports, folks, from the US is feeding into inflation. We also had industrial production turn negative again as well. So things in the US are not looking good. That feeds into this technical, which is confirmed that the US dollar trend is down. However, do you just dive in the market now and start buying euros, pounds, gold, etc.? Personally, with such a strong move, I want to see signs of a retracement so I can look for key levels in the market to then start to continue shorting that US dollar. So the levels I'm looking at, let's start at the big ones at the moment. The pound and the euro have been powering over the last 3 days and the end of last week. So what we're seeing here, I'm really looking for the euro up around 112. So far using 4-hour candles, as you can see on this chart here, that 112 level is holding. There is buying appetite to pay 112. Okay, if that was to break, however, if we get a move down, I'm looking at this 111. Okay, so that previous weekly all-time high, if that becomes support, then we could continue our journey perhaps with the euro dollar. And remember, they've got their CPI data coming out as well. So it's almost like we've had the report card for one child, which is bad, but now we've got the report card for the other child, okay? So the euro at the moment is the favorite, but we could see a bit of a retracement occur if their CPI data is weakening along with the pound. The other area I'm looking at is this dollar yen. So looking at the dollar yen, I know our own senior market strategist, Duncan Cooper, this week in the webinars was looking at a previous weekly resistance level to hold as we were seeing a really large amount of selling in US dollars. Well, that 137.90 weekly resistance has become support and the daily has put in a higher bottom. So there's a sign there we might be seeing some strength, whether it be short term, come back into the US dollar. We also saw the Aussie up at 69 resistance since fail as well, quite significantly over the last few days. New Zealand up around 68.30 weekly resistance, it failed as well. So we could therefore see that feed in to the pound and the euro and get a pullback allowing us to continue trading the trend now, which is short US dollars. All right, folks, that's all from me. Good luck with your trading, and let's hope for a pullback.